All right, in problem 18-1A. So this problem isn't too bad. It's giving us a process costing situation, and it's going through and giving us the activities that happened during the month, and we just have to make journal entries. So not too bad. So in this one, we have a carpet company that makes carpet. They have a spinning department, which spins the yarn, and a tufting department, which actually attaches that yarn to some backing. It starts off, it gives us some inventory balances. So we have finished goods, work in process for both departments, and raw materials. And then it goes down here and gives us all the activities and asks us to do journal entries. So we have our journal entry sheet over here. And so we'll start going through them. So the first one is materials purchased on account. And so if we buy materials, we debit materials, we credit accounts payable. And it says that we bought 84,900 of material. On part B, it says that we requisitioned materials for use. And so we did some fiber, carpet backing, indirect materials for both departments. So as we requisition materials, we debit our work in process for each department. And then as we requisition for indirect materials, that increases the overhead. And the credit is to materials. So when we're requisitioning overhead accounts, that means we're actually incurring that cost. So we're not applying it, but we're actually using it. So that's a debit to factory overhead. So it's going out of materials into our factory overhead account. And part C, we have labors being used. So we have direct labor for each one of the departments. So that goes into work in process. And then we also have indirect labor, which goes into our factory overhead account. And the credit to that is going to be wages payable. In part D, we have depreciation. So we have depreciation for each department, so that goes into factory overhead. And then the credit is accumulated depreciation. So in part E, we have expired prepaid factory insurance. So that insurance, since it's a manufacturing cost, it's not an insurance expense. It actually goes into our inventory. So that's going to go into our overhead accounts, and the credit is going to be to prepaid insurance. So part F, we have applied factory overhead. And so in these first three problems, we're incurring factory overhead. And so we're building up our factory overhead account. In part F, we're taking that factory overhead out of the overhead account and actually into our work in process. So see here. We're taking items out of factory overhead, so it's a credit, and we're putting it into our work in process account. So part G, production costs transferred from the spinning department to the tufting department. So that goes into our tufting, that's a debit, and out of our spinning, that's a credit. In part H, we have production costs transferred from the tufting department to finished goods. So that means we're increasing finished goods and we're decreasing the tufting department. And in part I, cost of goods sold during the period, so we actually go and sell everything, or at least part of it. And so cost of goods sold is a debit, and we decrease our finished goods inventory. We got a little check figure here to make sure our journal entry balances. We all balance, that's good. All right. And so the next part of our problem wants us to calculate the inventory balances for our inventory accounts and for our factory overhead accounts. And so the beginning balances are given over here. And then to calculate the change, we'll just take our debits and our credits. And so all we have to do is go through here for materials and add up all the debits for materials and all the credits to materials. So there's one debit and one credit to materials. And we do the same for work in process spinning. Go through each one of these line items, add up all our debits and credits. Same for the tufting, work in process tufting. Add up all our debits and credits. Leaves us with $2,000 balance. And same with finished goods. Leaves us with 4,100 in finished goods. Factory overhead is the exact same. We take all our factory overhead accounts, factory overhead for the spinning department, factory overhead for the tufting department. It said in the problem that there was no beginning balance. So we add up our debits, which is the overhead that we incurred. And then we add up our credits, which is the overhead applied. So you can see in the spinning, we actually over-applied our overhead. So we applied more than we actually came in. And for the tufting department, we under-applied it because we actually incurred more than we applied. So not too bad on that one. All right, in our last problem, so that's 18-2A. So this one is actually a lot like our example exercise 16 that we did. So we're just going to put together a cost of production report, calculate equivalent units, and then apply cost. So this is even kind of the same deal. We have a coffee company again. The only really difference in this problem is the information is presented just a little bit differently. So it's not going to be too bad. And so if we start off with the inventory in process as of March 1st. And so it tells us what our beginning balance is. So that's 1,500 units. And then we add in what we received from the storeroom. So we added 22,300 for 23,800 units. So now we have to figure out how we're going to assign cost. And so the total units from the beginning inventory, I'll just link it here. And so for the beginning units, we're not going to apply any direct material cost because they were applied in the previous month. So this is going to be 0. And then for the conversion cost, okay, we have a beginning balance of 1,500 that are 30% complete. So that means 30% last month. That means we're going to add in 70% this month. So started and completed. So it tells us we have 22,300. And so started and completed. So here we go. So the goods transferred out. So what went to finished goods is going to be 21,700. However, we already had 1,500 in. So what was started and completed was 20,200. Since it was started and completed, that means we got to add our direct material cost. And it was completed, so we add it to conversion costs as well. All right. And so for our inventory in process, so it's not telling us how much we had left in our ending inventory, but we can figure that out with the information that we have. And so, because we know we have to count for 23,800 units, and so far we've accounted for 21,700 units. So we have 2,100 units to account for. And so this is what's left in the inventory. That means we've actually added in the direct materials. So that we have full amount for direct material costs. And for conversion costs, it says that it's 40% done. So we have 840 units to account for. So now we have our total units to be assigned cost. So we have our whole units, our direct material units, and our conversion cost equivalent units. So let's figure out the total cost that we need to account for. And so it tells us that we have direct material cost of $86,970 and total conversion cost. So conversion cost is our direct materials, so it's $11,900, and our factory overhead, which is the $577.72. So if we take our total direct material cost, divide it by our total direct material units, we get $3.96 or $3.90 for direct material units, and 80 cents for conversion cost equivalent units. And so for the cost related to the inventory and process, it gives that to us $61.50. And then the total cost incurred in March is going to be the sum of our direct materials and conversion. So the total cost to be accounted for is going to be $110,792. And so to complete the inventory for direct materials, so we have 0 direct material units times our direct materials, so that's going to be 0. And we have 1,050 conversion cost units in beginning inventory times our 80 cents. So we have $840. The cost to complete our beginning inventory. So now the cost for the started and completed in March, take our 20,200, multiply it times our 390. Our 20,200 times our 80 cents gets us 94,940. So we're up to 101,930 cost that we've accounted for. We have to get to the 110. And we get there by taking our direct material units, then our conversion cost, units and ending inventory times our cost per unit gets us 672 with total of 8,862, and now we've assigned our total cost of 10,792, and we match.